I'm Corbett Wall with DV Auction, here with a 3-minute cattle market update for Friday, August the 5th, where cattle markets opened the week sharply higher and then have continued pretty good through middle of the week. Here late in the week, the board's starting to slack off a little bit, but the cash markets are staying strong. Really the feeder cattle more than anything, as feeders have gained more ground this week than the fats by far. And the feeder cattle market is really hot, and the feeder cattle are hot out there in the pastures right now, and they're mostly shaded up or in the ponds because it's just so hot and not a lot of cattle moving through the auctions, and these feedlots are having a hard time getting their hands on them. That's one reason that the cash feeder cattle market is so hot, because there's just not a lot to choose from out there. And most of those cattle that were, or all those cattle that were coming off those double stock pastures have already gone on now, and the rest of the cattle will stay in their wherever they're grazing right now till the end of the summer or into the fall there, whenever they're supposed to come off. But not a lot of cattle moving right now. Look at your live cattle futures for October. On Wednesday was up 52 cents. Thursday was off 42. To end the day on Thursday at 114.77. Your August spot market's at 116.32, and not much of a basis there to what the cash market is. Feeder cattle, a September contract on Wednesday was up $1.72 after good gains earlier in the week. Thursday was down 37 cents, not too much, to end the day on Thursday at 145.22. Your August spot futures there are just trying to align themselves up with the index for the end of the month, and they ended at 147.57, up a dime. But your CME feeder cattle index is at 145.64. Your real-time index on Cattle Market Central is 145.52, so they're right together there. We assume that here at the end of the week, your CME cash feeder cattle index won't change a whole lot. But if you look at one thing that's interesting there, both those indexes are well above the 750-pound average on there, because there's more cattle coming in weighing at the top of the index spread there than at the bottom. So we could actually tweak those numbers up just a little bit on both of those, and it would get closer to what the board is. You look at your grains are still depressed and down, and that's another thing that are boosting the feeder cattle up. This corn is getting below the cost of production. Your new crop corn December is at 331. And it seems like it's going to fade. May fall below $3 there. Everybody you talk to where they grow a lot of corn says it just looks fabulous with great big ears on it there. We've had a lot of rain in the dead heat of the summer, and that just makes big corn there. Look at your cash fat cattle market there. Did start trading cattle on Thursday, which is another good sign. So we've got several things that are looking positive for the cattle markets here on Thursday, and fairly early in the day, early in the afternoon, started selling some cattle at 118, mostly 118, and then a few late sales at 119. So gives another little boost, and then they're not done trading yet. They'll trade some more on Friday there. That's $1 to $2 higher than last week. Dress sales are also 1 to 2 higher, from 187 to 190. Your slaughter's looking pretty good, 449,000 so far for the week through Thursday. That's 2,000 better than last week and 22,000 better than the same week a year ago. But these feeder cattle are really still too high. Or not really still too high. They've been too high for a long time, and they're too high to hedge, and these feeder cattle won't work. Yet they're still rising, because these guys that run the feedlots and that feed cattle, that's the only way they know to get back what they lost, and they're going back to where they lost it to try to find some more. But they just keep buying these cattle. They're going to have a lot of farmer feeders in there. Their bins are full now. They've got a bumper crop out there that they've got no place to put. They're going to walk a lot of this to town. They're in there digging on these cattle, and these cattle won't work, and your out front fat futures are very sluggish, and it's going to be a hard time trying to get these cattle hedged or put off some of that risk. What really needs to happen is the cattle complex needs to learn how to get profitable at these lower levels. We're not going to see $3 500-pound steers probably anytime in the near future, unless we elect Hillary and she increases the minimum wage to $15 or $20, and then a value meal at McDonald's costs $15 or $20, and then inflation just runs rampant. But your $3 500-pound steer won't be the same as it was the last go around, that's for sure. But we just need to learn how to get profitable at these lower price levels. We've got lower priced inputs, a lot of things, including feed costs, fuel, Money's cheap. A lot of things are cheap, and these cattle people just need to learn how to live within their means and within the market. But you look at a cash feeder cattle market here, middle of the week, El Reno, Oklahoma, 7,200 head. Feeder cattle $3 to $6 higher. If you look at Cattle Market Central's market report out of El Reno there on Wednesday, shows really a feeder steers look $4 to $7 higher. The heifers $1 to $4 higher, but the calves sharply higher. You look at the report out of Salina, Kansas there on their big Thursday sale there, feeder cattle sale, and you see that they had a good market there, gaining in most all your weight groups there. But you look at those 7-weight steers are averaging over $150. And that's getting up there pretty good. Look at an individual quote on Cattle Market Central out of Pratt, Kansas on Thursday. Had 60 head load weighing 824 pounds at 151. That's 3 minutes. We'll talk to you next week.